What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 18th of 2018. Well, folks, it's time to do a daily update here on the Data Dash channel, and I do want to start off by saying that I apologize for the recent lack of content and all these crazy times. I just got out of Ireland this week, had a wonderful time starting off my international trip, and now I'm right here in the middle of London. So if you hear some background noise, I do apologize about that, but I'm excited to come see some of you out here, so please see if you can come to the events if you're out this way. But today we have a lot to talk about on the daily update because we're not just going to be recapping over the past 24 hours. We're going to be talking about the past few days of all this crazy sell-off in the market and the recent rebound we've seen. So the real question is whether or not the market's selling off, and we'll dive into that throughout the video. Along with that as well, we'll be doing some price analysis on the market leaders and jumping through some really interesting headlines. First and foremost, the Nasdaq is launching 2 new ETFs this week. They've actually launched them already that will allow institutional investors as well as retail investors in traditional markets to invest in a bundle of different stocks that are based in the blockchain space, or at least making strides and innovations in the space. Along with that as well, there was a pretty big headline coming out that supposedly the South Korean government announced that officials within the South Korean government utilized the supposed South Korean ban to their advantage in regards to insider trading. So we have a lot to talk about in the video, guys. Let's go ahead and dive into it. So first and foremost, as we can obviously see, the markets have taken a little bit of a rebound. This has been an absolutely insane week for cryptocurrencies. And because of that, we really need to kind of gain an assessment on where we are right now. So as we take a look back here, going over here to the global charts, when we were riding up here in this area, we were talking about how, look, the altcoin run-up we've had over the past month and really over the past 3 months has been fantastic. It brought a lot of valuation to people holding cryptocurrencies. People, increased their portfolios. I know for myself as well, I increased my Bitcoin comparative to a very high degree during this run-up. And much like back in April, May, and June, we had a fantastic run-up, a lot of opportunity in the market, and to be fair, on a lot of projects that really didn't deserve the valuations. But it was a way that you could trade and invest in projects, take a little bit more risk in the market, and really see a high return. But as we talked about for the past week or two before I left for my trip, and really the last time we really gotten to cover these markets, the big thing I emphasized is that there was really 2 things to look for. First and foremost, we were obviously entering towards the end of the run-up. If you were taking high levels of risk at the peak of this run-up, guys, to be fair, it's kind of on yourself. We're obviously seeing signs that the market was in a ridiculous phase. You saw the average top 100 coins up, 10, 20, 30% on a daily basis, some up 50 or 80%, and coming out of nowhere, adding billions of dollars in valuation. When markets get to that level, and they do it for so long, even in a new market like this for cryptocurrencies, you have to step back and realize that you can't live in la la land forever. Things eventually come to an end, the punch bowl tips over, and the valuation will drop instantly. And that's how we saw Ripple and so many players in the market instantly losing 30, 40, 50, even 60% of their valuation. And luckily, BitConnect losing up to 90+%. So BitConnect's done for. I'm very excited that was drained out of the market. And I was going to do a video on that in the future, but I just never got around to it. But now that we've seen crypto markets in general take a flush in valuation, we're in a much healthier position. Corrections are healthy for the market. It's not the end of all for cryptocurrencies. No, I don't think we're going to get drawn out towards a 2-year bear market like we saw after Bitcoin went to 1,000 in 2013. Some people have been saying that. I personally don't see it. The volume has not come in yet for something like that. You would need a mass sell-off from the whales in the space. But I think they have a big incentive not to do so. What we're seeing now more than anything is going to be a switch from Bitcoin and altcoins. So as we talked about, guys, we had a very, very clear target. What was that? That was for altcoin dominance outside of the top 10 to make it to 25%. Well, let's go ahead here and take a look at the past 7 days. If we give it a second here to load, let's go back here and look at the peak of the altcoin run-up. Where did it go to? 25%. Very big even level in the dominance, guys. Again, whether or not it was a self-fulfilling prophecy because we were all talking about it and everything like that, it came true, guys. The peak of the run-up ended right at 25%. 25% is a very big mark. That's a quarter of the market, and that showed that there was a lot of resilience in the altcoin space. There was a lot of optimism for dozens of other projects in the space outside of the top 10 to bring a new level of competition and innovation. Now, of course, there's obviously a lot of crappy cryptocurrencies that fall into the other 1,400 past the top 10. But at the same time, because of the fact that there's so many other cryptocurrencies, you have much more room for valuation growth. So what's my take on altcoins here, or at least the other coins out of the top 10? To be fair with you all, as much as I think there's a lot of opportunity and a lot of candidates, I think we've had the crazy run up in December and into early January. I think it's time to take a cool down in this space. And Bitcoin dominance remaining so low right now, I think you could easily see go on the up and up with Bitcoin, as we'll take a look at here in the technical analysis side of things. Being so low, there's a lot of upside for institutional investors or large-scale investors to still lock in profits on altcoins and step back into Bitcoin. Remember, something I talked about both at the event in Limerick and in Dublin is that there is a Bitcoin acts as a pool of liquidity. It acts as a pool of liquidity to invest in other projects. And you think about it, whenever you trade any kind of altcoin, you're usually trading Bitcoin comparatives unless you're trading on KuCoin or one of the other exchanges that allow you to trade in Ethereum pairs. Bitcoin is a massive pool of liquidity. It's a digital gold slash pool of liquidity that goes in and out. So when Bitcoin rises, altcoins usually drop. When Bitcoin goes down, altcoins usually rise. And we see it. It's a continuous cycle. So you got to play the cycles correctly. We've already had the great run up in altcoins. Now it's most likely time for Bitcoin to see some upside. And yes, we won't be probably up double digits every single day, but that's okay. Sometimes markets need to take a more secure position and stay more on the cool side. And honestly, just because we're not making double digits every day, we shouldn't be complaining. I think we've made, a wonderful amount of returns in this market so far. And I think there's still a lot more upside to go, both for Bitcoin and other altcoins. So let's go ahead here and take a look at the market leader here, Bitcoin itself. As many of you know, we had a pretty dramatic sell-off. The volume really started to kick in on the 16th and 17th. And I know many of you out there are curious about my stance on Bitcoin. Do I think that Bitcoin is going to 8K? Is it going to touch on the 200-day? Well, to be fair, folks, we were really stepping towards that here. We had a drop past the 100-day. Didn't hold there for quite some time. In fact, for two whole days, there was a period where we were staying under the 100-day. However, as of now, it's looking like the price has come up. The wicks ended off very long, and in fact, the closing on the price was close to the 100-day, seemed to catch support on there, and right now is still holding there. And to be fair, we've already had a 50% correction in Bitcoin. This is the area where, for example, back in 18 and 19K, you don't want to be greedy up there. You want to be greedy at the lower levels. You want to look to add to your positions down here if you believe in Bitcoin and generally in cryptocurrencies. Because remember, Bitcoin's going to stick around. It's going to be that pool of liquidity for altcoins. Whereas altcoins, a lot of are still overvalued, and some of them are rebounding quite sharply. Not a surprise after all the sell-off. You want to look to see the cheaper opportunities. What in this market is down 50%? Bitcoin. It's down 50% here, generally around 50%. At 11,500, it's a much better deal for investors and bulls than up there at 19,000. So again, I think it's very important to look at something at these levels. We found support at the 100-day. This is a common level of the past where Bitcoin will correct over. We've had these dramatic sell-offs before. It's no surprise. Now, for those of you out there who might be a little bit more on the bearish side and more levied towards the idea of Bitcoin going down to touch the 200-day, no problem. It could very well do that. But I would recommend to keep in mind the idea that we might not get a full correction down to 8,000 or 8,500. It might not just happen. So maybe, for example, in my case, I know what I'm going to be doing. If I do ever make any capital allocations towards crypto right now, I'm going to be focusing on Bitcoin, and I'm going to apply this strategy. I'll add my first 50% around this area in regards to my additional investment. And the other 50%, what I'll do is I'll either add it when it touches and makes contact with the 200-day or close to the 200-day, maybe around the $9,000 range. And if I don't get it around there, I'll make the other addition around 12,000 if it seems like we're really starting to recover off of the 100-day. That's my general strategy on it. But again, the main indicator right here to watch is the 100-day. Just like how the 50-day was our indicator up here. Once we got the close below there, guys, it was obviously clear the sell-off was coming through, that we were going to get a correction down to the next moving average. And if it becomes apparent like that on Bitcoin, you could very well see the same thing in regards to going to the 200-day from the 100. Alrighty, so let's go ahead here. Let's take a look at Ethereum. So Ethereum right now, again, has been holding quite well in regards to its previous run-up in this whole altcoin bull run. A lot of these coins in the top 10 are still holding their dominance in the market. And we can see that Ethereum has only really seen about a 10% correction from its peak at 10 million Satoshis. Now, to be fair with you all, I'm not taking a really a good long-term position, or not, sorry, I don't want to be negative on it in the long term. In a short-term case, I'm not very bullish on Ethereum. I think the price is a little overextended here. And what I would really like to see in regards to a trader's perspective in regards to price is to see it come down and find support on this previous level at 7 million Satoshis. It'd be a nice 30% correction from the peak at 10 million. Not to mention, you've got the moving averages racing right here and curving around that area. So if you see a good few days of sell-off and Bitcoin killing it, and altcoins will probably, feel the pain as well outside of Ethereum, you could really see Ethereum make a full 30% correction. And I think that'd be extremely healthy for it after this crazy round down from around, I think at the lows and stuff, it was at 20-something million Satoshis, or something around that range, maybe 30 million or 3 million. But again, you need these kind of correction, guys. It's healthy. And I'm not negative on Ethereum long term, just my personal perspective in the short term. All right, so let's go ahead here, take a look at Ripple. Ripple finally having a nice scalable correction from its highs at 22,000 Satoshis down to about 10,000 and a little bit low there with all the crazy sell-off. But we made final contact with one of the moving averages. We talked about hopefully seeing Ripple come down and make contact with the 50-day, and we got that. Now, here's the thing in regards to Ripple, guys. A lot of you would say, seeing as we make contact with it, it's on the lower end, it's cheaper, it's roughly a little bit, maybe a little bit above a 50% discount. Is it time to buy? To be fair with you all, I'm not going to be trading Ripple. You already know, kind of in a moral sense, I don't like to trade and invest in Ripple. But along with that as well, to be fair, we're still very, very overextended, guys. We're still up 10x from the bottom for Ripple here. We really got to keep that in mind. So because of that, I'm not going to be touching it. I'm going to be very cautious about trading Ripple here, and I'd like to see it come down here and maybe find support on one of the moving averages, not to mention maybe on this base level around here at 5,000, sorry, not 5,000 Satoshis, around the previous resistance here at around 7,000 Satoshis, and make contact with the 200-day. Seems like it'd be a good level for me personally. All right, so next up, let's go ahead and take a look at Bitcoin Cash here on Bitfinex. Now, what I'm looking for at Bitcoin Cash right now is I'd usually say, for example, how we kept on seeing support at the 100-day here, that this would provide a good trading opportunity. We're back down to the 100-day. However, to be fair, guys, I'm not going to be trading this one. I think this one has some room to go down with Bitcoin going up, and you can see it touch the bottom line of the support here. But what I want you all to watch in regards to Bitcoin Cash here is this wedge and price action that we're starting to see forming. And I think that you're going to see a coiling of the price action within the wedge and an eventual breakout to the upside or downside. Now, what's the catalyst that's going to lead that to a big breakout or breakdown in the price? I don't know. I can't predict markets that far ahead. But you can see going into mid-February, so about a month from now, that it looks like Bitcoin Cash wants to do something. So if you see it come down here, find support on this line, then look to see if it's going to curve to the upside or curve to the downside and really have a big breakout. And look for news headlines that could carry that price action, okay? Could provide a good trading opportunity. And last but not least, ADA BTC, taking a look at Cardano here. Cardano is looking very, very nice, and I'll show you why I think that in just a second. First and foremost, I think it's the wedge that's really getting me excited here. As you all know, I like Cardano long term. However, with the wedge forming here, the price action coiling in, we could see a breakout relatively soon. What I like here is if we go here to the hourly, it looks like Cardano has obviously a little bit of a recovery from the sell-off. And if we can see a curve on the hourly outside of the wedge, this could be a breakout. We're getting very close to it. But if it obviously takes a nosedive through the bottom here, it might be down to the bearish side. I personally think this is going to be a cup in the price action. I think we're going to see some upside here. And what we could see maybe in Cardano is that we have the initial breakout. We might get a cup in the price, the handle, and get a full cup and handle formation and an actual breakout to maybe all-time highs now that Bitcoin is at a lower level. Could give Cardano some room. And the reason why I say that is because Cardano's valuation has dropped pretty dramatically. We're down to about 16.8 billion here, whereas we were at the previous highs of 32. So practically from its lows of the pullback, we had a 50% correction. Very, very healthy for Cardano after this incredible run up. So again, a lot of market players doing quite well, guys. To be fair, looking for Bitcoin to perform well. And of course, as always, I know a lot of you are concerned as to whether or not I'm going to be doing my top 3 coins video. I will be doing that soon, so keep an eye on that, and I'll be doing that video soon. Just want to make sure I got plenty of research behind my picks, and I picked some ones that I really think are going to be winners during the month. Give you guys some good picks. All right, so First and foremost, in regards to the headlines, the first blockchain ETFs launched on the NASDAQ yesterday. We had two different competing ETFs coming out, the Reality Shares Advisors and Amplified Trust ETF. Notice how the titles don't have blockchain in it. This is due to the fact that the SEC has been denying any listings that regard having blockchain in the name, because we've seen how crazy stocks move in regards to having blockchain in their name. But these pools have brought together some good capital, investing in a variety of companies that are investing in the blockchain space. However, this probably isn't to the degree that people would want it to be, or at least institutions would want to get in the sense of a piece of action. This will at least give a good sense of permission to get a fractional bit of ownership in the space. But this isn't like investing to the risk of an ICO, or even investing in like a top 5 or top 10 coin ETF in the crypto space. It's not exactly like that. What we're seeing right now is that within these ETFs, or at least in the Reality Share Advisors ETF, that there is an opportunity to hold a good listing of blue chip companies or large scale names that are starting to make strides and innovations on a private level in blockchain enterprise. So what are some of these names? Well, on Motley Fool, they had a good article here that showed some of the ETF's assets. In the top 22%, you have a lot of big names here. Of course, Overstock being the top one here, and with their recent ICO launching, this is probably one of the best holdings to have in here. Along with that, you have IBM, SBI Holdings, Hitachi, Cisco Systems, NVIDIA, a lot of big blue chip companies, as well as Microsoft, taking a part in this holding of the ETF. Now, for those of you who don't trade in traditional markets, ETFs generally either track a certain commodity, or they usually are a bundle of different stocks that you can put. So imagine a basket where you can just toss in a lot of different stocks. Instead of having to just own Apple, maybe you want to own an entire holdings in the tech space. You want to own Apple, Microsoft, all kinds of different computers, maybe for example Oracle systems, all kinds of different corporate entities in a bundled ETF to mitigate risk. This is what an ETF does, and this could be the very first step. If the SEC doesn't go towards suppressing it, this might be the first step to where people can, at least on an enterprise or a traditional market sense, have an opportunity to invest in the blockchain space. So I'm very happy about it. It seems like so far they stated that the SEC has not gone out and so far as it doesn't have blockchain, the title, they don't seem to have an issue with it. Not to mention, most of these companies are very well respected. So it's a very low risk play, but it's a start. And I think it's definitely exciting to see institutions getting more interest in this. Okay, along with this as well, the sad face here on this guy in the picture is definitely reeling towards how I feel about all this. The South Korean officials have been caught trading red-handed with insider information in regards to all of the funding as of recent in South Korean markets. So there was an official statement that reportedly the Korean officials have been caught with insider trading. This was all due to the recent funding case that the Ministry of Justice has come out and stated that they were talking highly about making a Korean ban on cryptocurrencies. And of course, there's been many statements since then that have continued to fuel the FUD. And we've all just been obviously sitting here thinking, what if the institutional investors or the institutional insiders in the Korean government have been using this towards their advantage? And as much as I honestly sat back and I kind of laughed at that, I'm like, yeah, I know it's always standard to us to think that insiders are going to be benefiting from this. I guess it's really not further from or it really couldn't be closer to the truth regarding to the recent statements here. They had a quote right now from a Jogang, I'm not even going to try to pronounce the name, but basically a right-wing party lawmaker stating there is intelligence that the FSS, which is the Financial Superiority Service inside of South Korea, the staff sold all of the virtual currency that they invested in just prior to the announcement of the government measures. So, yeah, I mean, guys, it's not too surprising at the same time to see stuff like this. Again, we've had this happen in traditional markets. Greed can play a very big role when you're playing with billions and millions of dollars. And this is, it doesn't matter if it's in South Korea or here in the United States. People fall for that kind of trap. They fall for the greed factor. And to be fair, I don't think there's going to be much repercussions. This is the traditional system of finance and power structure in the world. Officials usually don't face ramifications, much like official banking officials or government officials during times of crisis, during times of poor judgment and poor moral efficacy in regards to announcing these type of headlines or talks on banning cryptocurrencies. And it again goes to prove that I really don't think there's going to be any serious ban in South Korea. Again, going towards my long-term philosophy, I always like to tell people to look towards the deeper side of things. Don't chase the headlines. if we take a look at South Korea and generally in Asian markets have been pretty optimistic on cryptocurrencies. The vibes we get in China is that they want control over blockchain-based projects. In Japan, we see an absolute adoption of it because their outdated financial system needs the infrastructure. And I'll talk about that with the resource I'm going to give you guys at the end. And along with that as well, in regards to South Korea has been making heavy investments in blockchain technology. They've stayed ahead of the game for quite some time. And we see this with Icon, for example. Icon has been receiving support from the South Korean government for the past 2 years. And you still, for example, in China, see projects like Neo and Nulls continuing to do well in China and operate even though they've blocked trading of cryptocurrencies and ICO projects. So what does this tell us? Well, it tells us obviously that Asian markets, especially South Korea, do not want to miss out on this. They don't want to miss out. They're not going to, just say, no, we're going to block blockchain technology forever, because they understand they can't control it to a full degree, but they want to have at least a sense of control. And I think that, for example, in the sense of the Prime Minister of South Korea, in his previous statements back in December, he's worried that things like BitConnect, other Ponzi scheme or scam-based cryptocurrencies are going to take off, and he wants to make sure that those aren't going to spread. So I think that's the main objective here. Understand that South Korea has been making strides and investments in this technology. They see the potential in it, but they want to make sure that it is at least and to a certain degree regulated. And whether or not you guys agree with that, keep in mind this is a government body. They're going to try to do whatever they can to have a sense of control, whether it be for the good or bad of the people investing or participating in it. So that's the standard kind of root of everything, guys. I believe South Korea is not going to ban anything. They might set tighter KYC regulations, especially on ICOs and standards for those ICOs, in order to make sure that they're paying taxes and following the standard regulatory procedures that much like any other investment would have to follow in regards to the South Korean government. So the last thing I want to leave you guys with is something I want to start doing with my daily updates from time to time. And if I forget maybe from time to time, I apologize. I always fit a lot into one single video. But I do want to leave you guys with a wonderful resource here from Charles Hoskinson. I like to sit down and share from time to time resources that I go through and I watch. And Charles Hoskinson did a wonderful speech for Input Output Hong Kong on third generation blockchains at a G20 Ventures meeting that he recently spoke at. There's a lot of great things he talked about. In regards to when we were talking about was just in regards to Japan, we were just talking about how Japan's economy, much like other different countries, is quite outdated in regards to their financial system. And Charles was going towards answering the question, for example, as to why he hosted his the capital raising that they did for Cardano inside Japan. And the reason he said it was because that they're focusing their project in regards to countries that have outdated financial systems. So Japan's a very developed economy, but the interesting thing that I learned from the video is that so many people in Japan still use paper currency. They don't use digital money. In most developed countries, you have around 95 to 98% of all money being digital. And that's a very, new concept really in the grand scheme of things, but it is the modern reality. It is the world of Apple Pay. It's the world where we swipe with our debit and credit cards. And over, here in Europe, for example, you can hold up your card to a machine and you don't even have to swipe it anymore. You can make purchases under $20 and just tap the screen with your card. It's pretty cool. But that convenience factor is not found across different parts of the world, and they're still living in a very cash-based society. So Cardano wants to bring that decentralized, that decentralized currency out to those areas to provide the infrastructure, to provide a kind of a gateway for others who are in less fortunate situations, mostly predominantly underdeveloped countries in Africa, areas like China and Japan and South Korea that are well developed but still are in an outdated financial system. Japan's economy, again, still needing a lot of updating. These systems need a new onboard for a modern financial system. And what would be awesome is that whereas here in the United States and the western part of the world, where there's a lot of regulation and a lot of things stopping new innovation, in those economies, they need these types of technologies. And the regulatory agencies are much more open than people might think at first. So I really recommend you check out this video, guys, and continue to spend some time to do some daily research. I want to say that, again, I apologize for not being around for the past few days, guys, but I want you all to keep in mind I'm continuously learning, continuously keeping up with the market, and I'll try to definitely answer any questions that I can with all the craziness going on, all right? So keep learning, stay safe, trade smart, guys, and again, I'll be back here soon. I hope to see, for those of you who are in London, I hope to see you all soon. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.